All right, so welcome to another video. In this episode, what we're going to do is we're going to talk about 4 day trading tips that I'm going to share with you in order to being a little bit more consistent or smarter about your day trade. So if you're trying to be a little bit more active in trading, that's what we're going to go ahead and cover and talk about in this episode. So let's kick things off and let's get started. Keep in mind, if you want to grab some great freebies, check out our Traders Fly website. There's a freebies section over there. We've got a lot of live classes as well that we host, including some with options. So check that out. Okay, so let's kick things off. I'm going to start out with tip number 1, and that is use a small amount of capital for day trading relative to your portfolio. So what does this really mean? Okay, so when we go in and when we start looking at day trades, what a lot of people do is they go ahead and they use like 100% of their money or account in order to day trade. So I'm going to go ahead and draw a little pie shape here. And let's pretend, this is kind of your full capital. So what people do is they go ahead and use like 90% of their money for day trading. But unfortunately, with day trading here, when you're looking at it, it's not going to be as consistent all the time. It's a little bit faster type of trading. And the more capital you have, actually, the more you need to spread things out on the longer time frame, because with day trading, you'll get a lot more fluctuations and wiggles and moves with volatility, in other words. And with that volatility or those magnitudes of moves, they can psych you out and fake you out in a large amount of your capital or account. However, if you go ahead and reconstruct this pie chart, and we go ahead and actually do something more like this, where this is long investing, okay, this might be some option trades. And then what we'll do is we'll take a little sliver here. Okay, this little sliver, and I'll make it pink right here. So this pink sliver will be used for day trading. Okay, so we're going to go ahead and use a small amount of capital for our day trade. So let's say you have $100,000. What you could do is go ahead and use maybe $5,000 for your day trades. Now you might say, well, why can't I use $90,000 and just set a stop? Well, the fact is that at any given point, a stock might do a big downdraft or move or gap down and go against you very quickly, and you have no idea when that's going to be. So the risk on the table, or the risk you actually have that you've placed a trade on, is the risk that you have to deal with. So even though you might say, I'm only going to risk this amount and have a stop or a stop limit, you're going to have an alert, that doesn't matter. The fact is that if you have money on, a trade is on, then it is at risk. So make sure the capital at risk is only a tiny bit or a tiny amount. For some people, I draw this for options where we have a base of a triangle. And what you do is you have a lot of long portfolio trades at a base for things to go up. You have a lot of theta trades. And then you have your speculative trades right here. And the speculative trades are the tiny amount of trades. And that is kind of your day trades. So this long portfolio might be 50% of your account. Theta trades might be 30. Then you got maybe 10% into day trading. And then, the remaining amount would be in cash and so on. So that's what you want to look at when it comes to kind of day trading, is just use a small amount or appropriate amount of capital for those trades. All right, let's take a look at number 2, and that is peel off your profits into strength. So a lot of people do not do this. So if we're looking to do any kind of trading, what we want to do is we want to go ahead and peel things off into strength. So if I go in and let's just say I'm looking at Apple here, and if I wanted to trade it, just at a general concept of buying the stock, let's say you bought the stock somewhere over here. As the stock continues to head higher, even if you're just dealing with shares, not just options, but you're just dealing with shares, as it continues to head higher, you might take off 20 shares, then take off another 20 shares into profit, and then another 20 shares, and then leave the rest riding until you're comfortable to take it off. What a lot of people do is they go ahead and they go in and they say, okay, I got 100 shares. I let this thing go. Well, I didn't sell my 100. Okay, so that didn't work. But then the stock will start coming back down, and then they start panicking. It's coming back close, and they get rid of their full 100 shares. And that's just because they just could not handle the movement back down. And you can handle that movement back down if you're able to take things off into strength or peel things off. So similar to here, let's say you caught this in the morning. This is TJX, started to go up. You got 100 shares, started to go up. You sell like 30 shares, goes up, sell another 30, starts pulling back, get out of the rest of them. And then you've at least taken profits 2 times And this allows you to capture and stay profitable in these trades. So otherwise, if you do it kind of the wrong way, you get your 100 shares, you start seeing your profit here, it looks good, it starts to roll over, you panic, and now you start hoping, and then you get out for a break even here somewhere, pretty much where you got in. So always make sure you peel profits into strength, okay? And that'll help avoid a lot of problems, and it'll cushion you from, just those pullbacks a bit. All right, let's take a look at number 3, and that is set a max loss or a max number of trades per day. This one's nice because if you go ahead and you look at a calendar, and let's say we've got here a handful of trades that we're looking to do on a week-to-week basis. Okay, what a lot of people do is they say, okay, they put on one trade here, and they do it kind of every day. But then the issue starts happening is that, okay, you do one trade a day, but then this trade is kind of a loser. All these other ones were winners, 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 and you did one trade a day. But when you get a loser, you might actually do like 3 or 4 trades. And now this becomes a problem because now you're losing 2 times, 3 times, 5 times, 10 times as much as that single trade. So instead, what you want to do is if you're looking at, okay, I'm making 100, making 100, making 100, then what you want to do is at most lose maybe 200. But if you start doing 2 or 3 trades now, 3 trades, that might be losing 600. So now you have to have many more wins to make up that single loss. And that's because you're over trading on a condition that's not favorable. It's kind of like driving in the rain. So if you're driving and it's raining, you might want to make sure you be a little more careful, slow things down. It's not favorable. The conditions are not there. So what we want to do is slow down. So instead of, let's say, 80 miles an hour, you could go ahead and slow down to 60 miles an hour. So all those factors will kick in and have a little bit of an issue. So if you're creating losses on a certain day for the day trades, then you don't want to go ahead and do 3 of those or 4 of those or 5 of those. And that's where you start seeing things cycle out of control, where people, they lose 100, then they lose another 100, they lose another 100, and all of a sudden, normally they're making 100, but they lose, 300 or 600 or 800, and they lose 10 times what they normally make. And now you got 10 to 15 trades to do to just get back to even. So that becomes a little bit of a problem. So be a little bit more careful here when it comes to over trading here. So setting a max loss or a max number of trades per day can help avoid that problem. All right, let's go to tip number 4, and this is going to be my last one, and that is look at multiple time frames. If you go ahead and just look at only like a 10-minute, 15-minute, 30-minute chart time frame, then that can be a little bit more blinding because now you're not seeing the longer picture. So what I like to do is just look at a 3 times time frame. So if you see that you're looking at a 10-minute, or let's say you've got a 30-minute on one, you've got a daily, and you got a weekly on another, if all 3 time frames can push for you and move higher, or they're all in alignment, then you're better off because now you've got 3 time frames, the long investors working for you, the medium investors, and the shorter term traders are all in alignment. The problem is sometimes when you see one chart moving down and one moving up, you've got kind of a little bit of disconnect there happening. So if we go ahead and pull up Apple here, what you'll see is the shorter duration here, we're kind of pushing up. The medium term here on the daily, we pushed up and pulling down. So here we've got a little bit of resistance, you can see. And the weekly chart's really just sideways chop. So as you start looking at all this, okay, you can see we're start putting on some of these lines over here. We get an idea of kind of where the resistance is. So this one's telling me I'm sideways. This one I'm right at resistance. You can see there's those resistance levels. So that also means if I'm believing that this stock will go higher, I need to be more trading and watching this zone if it can actually hold that area. Okay, so here's 165. There it is. There's that level right there. So as I'm checking this out, here's my support. So I've got these 2. This one's good. This one's good. But this one, a little bit tough. So not all 3 are in alignment. So you need to be a little bit more careful. So if you can look at 3 different time frames, that'll be a lot better off. And it doesn't matter which stock you're looking at. Here's Goldman Sachs, for example. This is heading higher here, but this is heading lower. This is heading lower on the weekly, the daily. They're both lower. This one's a bit higher, so there's a disconnect. If you can get all three working together, you're going to be way better off. So anyways, those are a couple of quick tips that I thought I might share with you. As for day trading a little bit better and making sure that things are working out in your favor and getting a little more consistency. So thank you so much for joining me. Feel free to check out the Discord group or some of the live classes that we have available. And I will see you in the next video and update.